Now, viewers, global investors are facing a renewed geopolitical risks following the U.S. capture of Venezuelan President Nicolas Maduro. Now, just hours after the capture, Trump announced that American oil companies are prepared to invest billions of dollars to restore Venezuela's crude production. Analysts say that this could push oil prices lower and also support riskier assets like stocks. Take a look at this report.
Global investors are facing a fresh surge in geopolitical risk after the U.S. capture of Venezuelan President Nicolas Maduro. President Donald Trump said the U.S. would take control of the oil-producing nation, while Maduro is in New York to face drug trafficking charges. Just hours after his capture, Trump said American oil companies were prepared to spend billions of dollars to restore Venezuela's crude production.
The oil companies are going to go in, they're going to spend money.
That could potentially bring oil prices lower and provide a tailwind for riskier assets such as stocks. But Karsten Brzeski, chief economist at ING, said any near-term upside for markets should be weighed against what is likely to be more uncertainty down the road.
In the shorter term, I expect financial markets to react with some kind of relief. Especially oil markets should react with lower prices. But in the longer run, what happened over the weekend is another example of the big geopolitical shift we're currently in. A geopolitical shift in which it is all of a sudden the stronger countries trying to take as much as possible, leaving aside all kind of international laws and international agreements. And this geopolitical shift to a world which will be dominated by the US and China, on the other hand, is something that will keep financial markets busy for a long while.
U.S. and global stocks ended 2025 near record highs, having notched double-digit gains in a tumultuous year dominated by tariff wars, central bank policy, and simmering geopolitical tensions. But safe haven gold also rose the most in 46 years to record highs. The price of oil edged above $62 a barrel in December, when the U.S. blocked sanctioned tankers from entering or leaving Venezuela, but has been fairly stable at around $60 since. Brent and U.S. crude closed 2025 with their biggest annual loss since 2020, marked by wars, higher tariffs, increased output by OPEC+, and sanctions on member nations Russia, Iran, and Venezuela.